Now, when I ask my students what they think is the biggest difficulty they encountered when they started trading, the most common answer is understand where the price goes. Now, the concept of trend is one of the first and most important things to understand when facing the market, and this applies not only to beginners, but also to more experienced traders. Understanding in which direction the market is moving, in fact, is fundamental to choose the strategy, to choose whether to negotiate in trend following or contrarian, to choose the point of entry and exit from the market, to choose whether to take advantage of a fast movement or whether to look for a more important movement. But how we define the trend? Charles Dow, born in 1851, was a journalist. He was the founder of the Wall Street Journal and the creator of one of the most important American stock indices, the Dow Jones. Charles Dow is considered the father of modern technical analysis. According to Dow's theory, in the price movement it is possible to identify three tendencies. The primary trend, from 1 year to 3 years, is the strongest direction. The secondary tendency, from 3 weeks to 3 months, and it is a correction from the main tendency, that is, a short movement in the opposite direction. The tertiary tendency, duration less than 3 weeks, this is a correction of the secondary trend and an alignment with the primary trend. The price moves in 3 directions. Upwards is identified by higher high and higher lows. The downtrend is identified by lower low and lower high. Okay? Then there is a third condition which is called lateral. It is when price moves within a range defined by a certain high and a certain low. So it is very difficult to understand which is the direction, if price is moving upward or downward. Okay, this is the lateral. Now, although on any time frame we can identify a trend, however, from an operational point of view, making a decision sometimes becomes difficult if we do not know with certainty which highs and which lows are most worthy of attention. The price fluctuates continuously, it is its nature, but the highs and lows it creates are not all of the same importance. For example, the small intraday swings, which scalpers like so much, are only noise, dirty movements, often the results of market manipulation. Consequently, to get a clearer, better idea of the market trend, we have to analyze the daily high and low and then those of the higher time frames. So, does that mean we cannot scalping? Of course we can, but we need greater precision. We must be snipers and take advantage of the movements that present the greatest profit possibilities. In this regard, we can integrate Dow's theory with an analysis technique that allows us to have a clearer idea of what the market is doing now at the moment we are observing it. It is a very simple strategy. We can take as a reference the opening price of the daily candle, for example. In principle, if the daily candle is green, I can also speculate that the price will continue to rise unless proven otherwise. That is, as long as the daily candle is green and the price will continue to move above the open. The moment the price falls below the daily open, the candle will turn red and I will have to prefer the sell. In principle, my expectation in this case is that the price will continue to drop for the rest of the day and I will want to go with the flow. This simple intuition allows us to establish which of the bullish and bearish waves, for example on a 5-minute chart, is the one that traces the impulse, which follows the trend and therefore offer us greater profit opportunities. As the motto "Trend is your friend" says, I can also make the same consideration on a weekly candle or on a monthly candle, and then I can also combine the three pieces of information together and zoom in on the current market movement. Now, let's open the chart and look, for example, the movement on the sterling. So this is sterling versus the American dollar. Let's open a daily chart and see the candle. So, what color is the candle? The daily candle. As you can see, the daily candle is green. So, this day the price is moving upward. Now, let's check the weekly candle. As you can see, also the weekly candle is colored green. So, also on a weekly basis, the price is moving upward. And what about a monthly candle? Also, the monthly candle is colored green. So, we can say that also on a monthly basis, the price is moving upward. Right? All three candles are colored green. So, the price is going upward on all the three time references. I can consider the monthly candle as the one that determines the main trend, the weekly candle as the correction or the continuation of the trend in the intermediate period, and the daily candle gives us information on the shorter period. Do you now see how clear it is to understand what the market is doing? Now let's see how this information is shown to us by the one-click tool. In one-click FX, there is an indicator. Okay, ciao Francesca, welcome here. I draw with the annotation, just a moment please, okay. On one-click FX, there is this tool on the right of the graph. This tool is called Time Frame Indicator. The time frame indicator tells us what is the price action on each time frame, starting from the 1 minute time frame until up to the monthly time frame. Okay? Now, okay, let's clear the chart. Okay, clear all drawing. Okay. Now, let's open the indicator input values. It is time frame indicator, and let's see what the different colors says. So the light green says that the price is above the open price. The lime green color indicates that the price is moving upward and that there is the breakout of the recent highs. In this case, we have a breakout on a daily basis, on a weekly basis, and on a monthly basis. Let's see a chart that is moving downward, for example, NZD versus CHF. In this case, we have a downward movement. And as you can see, if I open the monthly candlestick chart, in this case, this light orange indicates that the price is moving downward. The price now is below the opening price, but the price action is inside the range of the recent candle. On the other hand, the dark orange color indicates that there is also a breakout of the recent lows. Okay, so in this case, the price is moving downward, of course, but we are also in the breakout of the recent lows. In this case, as you can see, the frame colored by orange, this indicates that there is a very strong movement, a very strong directional impulse. In this case, of course, it is a bearish impulse. Okay? And finally, there are other two colors to look at, which are the dark red and the dark green. The dark red indicates that price made a false breakout of the recent highs, while on the contrary, let's check for a dark green, in this case the monthly candle on GBPOD. In this case, the color indicates that price made a false breakout of the last lows. As you can see, thanks to this indicator, I can monitor all market movement and consciously decide how to move. When all time frames are aligned upwards or downwards, as we just seen before, what I call confluence occurs. That is a moment of maximum directional trust. In that case, we can see all the time frame colored green or red, depending on the direction of the price. I can follow this current, or if on the chart I know that there is an important level that can stop the movement, I can also decide to take advantage of the correction that will result. However, my advice is to look for a confluence of multiple time frames to have a greater chance of success. For example, let's draw with annotate. In this case, in this instrument, as we can see, we have a green color on a daily basis, on a weekly basis, and on a monthly basis. These three time references are very important for a multi-day trading. Okay? If I want to trade for a multi-day trading, I need to look at these three time references. When all three time references are colored by green, I have the assurance that the market is moving upward. Of course, on the contrary, if the color is red, I can assume that there is a good opportunity to sell because the trend is moving downward, as we can see on CAD versus the Swiss franc. Okay. If we search an indication for an opportunity for an intraday trading, we need to look at little time frames. For example, I draw, for example, the 4-hour chart, 1-hour chart, and 30-minute chart. A confluence on these time frames indicates a very good opportunity for intraday trading. And of course, if I want to search some opportunities for scalping, I need to see a confluence the same direction on the minor time frames. In this case, 1-minute chart, 5-minute chart, and 15-minute chart. So, as you can see, I can see what is the condition of the entire market on all the time references, and I can also choose which time frames to look at depending on what is my trading styles. Let's clear all drawing. So, now that you have understood how to take advantage of this strategy, let's take a look to some example. Okay? In this case, we are looking at CAD CHF versus CHF. As you can see, the price action is red, so the price is moving downward on almost all time references. We have a downtrend on a 30-minute chart. We have downtrend on an hourly chart. The hourly candle is color red. The 4-hour candle is color red too. So at this moment, if I want to trade for an intraday trading, for example, I have red on all the three time references that I need to look at. It is a good moment to enter a position. Of course, maybe I need to wait that price closed below the recent low, of course. I have also a weekly level that I can use as reference, but now I simply wait the confirmation. I suppose the price closed here, where it is now. This could be a good signal, a good indication for enter a short position for an intraday trading. Okay, and then I need to search another level as reference for my target. For example, I can open a weekly chart, or I can open a daily chart where I can find the monthly lows and highs traced on the chart. And as you can see, there is a target in front of us, and the distance is of 294 points. So it is a good opportunity for an intraday trading, maybe also for a 2-day trading. Okay, Let's look at another example. Euro dollar, for example, euro dollar at this moment is moving upward on a daily basis. The daily candle is colored by green, but pay attention that it's colored by dark green. So we had the false breakout or the lows of yesterday candle. Okay, but if we open the weekly chart, on a weekly basis, as you can see, there is a great indecision. We have a doji. There is no color in this candle, so we don't have a directional indication. Finally, on a monthly reference, we can see that the monthly candle is green. The price action is inside of the recent monthly candle, but we are moving above the monthly open. But in this case, we cannot make any trading decision. Why? Because we don't know what can happen on a daily basis, on a weekly basis. Yes, we have long on a daily basis. We have long also on a monthly basis. But if we look at the weekly candlestick, we can see that we don't have a clear direction. So in this case, if I want to make a multi-day trading, I cannot take any decision because there is not the confluence. The confluence is the most important condition in the market that allows us to clearly understand what the market is doing and then, of course, to make a decision for my trading. Okay? But in this case, on euro dollar, I can decide I can do something. Maybe I can do something on a daily basis for an intraday trading because I have a confluence, a green confluence, so an indication of upward movement on a 4-hour chart. Let's look on an hour chart and on a 30-minute chart. As you can see, all these candles are colored by green. Okay, so it could be a good opportunity for trading intraday. But of course, if you look at the chart and check the levels that I can use to place my trade, as you can see, I have a good level that is the high of 3 days ago, but now the price is moving downward at this level. So I need to wait for the confirmation of the price that will start to move upward this level. So at this moment, I cannot do anything on euro dollar, nor for a daily trading and nor for a multi-day trading. It's clear? Let's see other example. In this case, the pound versus the Swiss franc, as you can see, has not direction in this moment because we have some time frames colored by green, some time frames colored by orange, sometimes time frames colored by dark red. So, which is the direction in this moment? This is a case when we usually look at the chart, look at trend lines and enter the position, and there are lots of possibilities that price starts moving in front of us, and so we receive a stop loss. Why this happens? Because there is uncertainty in the market. This is an information, a very important information that we cannot see simply looking at the trend lines. Okay, we need something more to understand what is happening in the market. Now, in one-click effects, we have indication of trend by our dashboard. So let's take a look to the instruments that at this moment are moving in trend. In this case, the indication of trend is based on another kind of information, but I will talk about it in the next webinar. At the moment, what we need to know is that the Australian dollar versus the Canadian dollar is moving upwards. There is an uptrend at this moment. And if we look at the time frame indicator, we can see that this is true. We have an uptrend on almost all time references, but we need to take attention at the daily reference. Why? Because this time frame is colored by dark red. In this case, We know that this color red indicates that price made a false breakout of recent highs. So this kind of price action can create a reversal a reversal pattern in the market. So if we want to decide for a long-term trading, for a multi-day trading, in this case we don't have confluence between the 3 time references, so we cannot make any decision for a multi-day trading. On the contrary, we have a confluence on the long side on the intraday trading, intraday references, sorry. So in this case, I can evaluate to enter position for an intraday trading. Of course, if the color is green, I can decide to buy. What is the price now? As you can see on a 30-minute time frame, we can see that price now is above the highs of 2 days ago. We also have an average price here, so it is a good place to check, to open a position. Okay, it can be a good opportunity. At this moment, I also receive a green color on the MACD, so it is a bullish momentum in the intraday trading. But of course, as you can see, intraday time references can change color very, very sudden, so we need always to wait for the close of the candle. But if this candle will close with a green color, with a green real body, we can evaluate to enter the position with the target, the next reference, the next level, which is the high of yesterday or 1 day ago. Let's see the pound versus the Canadian dollar, another example. Also in this case, as you can see, the price action is mixed. We receive different information. In this case, we don't have a clear information. Only on a daily time references, on a daily reference, we receive some kind of trend. We have a downward trend on a 4-hour candlestick. We also have downtrend on an hourly candlestick, and we also have downtrend on a 30-minute candlestick. On the hour candlestick and on the 30-minute candlestick, we also have the false breakout of recent highs. So this is a good condition to enter position downward. Okay, where can I enter my position? Of course, when I receive the confirmation from the price, which is at the breakout of the recent low. At this moment, we also have an important level to look at, which is the high of 1 year ago. So it is the high of yesterday. We are working around this level, and so we need to decide if to continue the trend, or to invert from this level. Okay, so it is, we need to be very cautious in this case. Let's see, for example, another example, NZD CHF. In this case, look at the time frame indicator. We receive a signal, an information of complete confluence. We have a downward movement on all time references, on 1 minute candle, on 5 minute candle, 15 minute candle, 13 minute candle, 1 hour, 4 hour, daily, weekly, and monthly. So in this case, the trend is very, very, very strong. In this case, we can also start to sell with an intraday point of view, for example, and then you will receive confirmation from the breakout of important levels. For example, if we open the daily chart, as you can see, we have a target near of the price, which is the high of 4 months ago. In this case, if price breaks this level and then breaks also the second level, which is the high of 2 months ago, we can open another position, and so we can build a greater position and then use as target the next level, which is an average price and which is the level corresponding to the low of 5 months ago. Why can I manage this position in this way? Because I have a very strong signal of the downward trend. So I can start to build my position, and then I can improve my price, my size, and I can manage my trade in a dynamic wave, okay? Starting from a daily time, from an intraday time, the intraday trading until a multi-day trading. So, do you have some question? Okay, okay. So these are different. We can do different example on how to trade using this information about trend. The most important thing, what I want to explain, what I want to show you, is that very often it's most important to look at the color of the candle. Most important than to see what is the trend based on a simple trend line. Why? Because when we have trend lines, if we look at the trend, simply looking at trend lines, we can receive different information depending on what is the time frame that we're looking at. For example, in this case, we're looking at daily time frame, and in this case, the trend line is going downward, of course, so we can assume that the price is moving downward. There is a downward trend. But what if we open a daily 15-minute time frame? Also in this case, we receive a short indication. In this case, we have a good opportunity to sell. But let's look at another example. For example, euro against the sterling. In this case, if I open a daily chart, I receive a short information because the trend line is moving downward, of course. But what if I open a 15-minute chart? As you can see, the situation appears very different because the price is moving upward. So how can I be sure of what is the condition of the market, or what is doing the market at this moment, this precise moment? I cannot have a unique information. I cannot have a certainty of what the market is doing simply looking at a trend line. I need something more. I need a different information. I can find this different information that is very useful for me looking at the color of the candle. In this way, I can trade the movement, which is the directional movement in the market. And I am sure of this. I'm sure that I'm trading the directional movement and not the correction. Okay? And as I said before, if I don't receive a unique information on all time references, as in this case, this is euro versus the sterling, as you can see, and we said before, the daily candle is green, the monthly candle is green, but the weekly candle is red. I don't have the same information. So if I want to decide to trade this instrument for a long term, for a multi-day trading, I cannot decide what to do. I cannot enter my position because I don't receive a clear information from the market. So that's all. This was a short lesson about how to trade looking at the trend. Now that you have understood how to take advantage of this new strategy, please open an account. So I repeat, please open an account with SuperForex by my personal website. Okay, I can share the link on my Facebook page, of course, and also in this chat. This is the link. Okay, so please open an account from here. You can also find lots of bonuses. There are promotions on deposit, there are promotions on the amount of deposit, and also you can also receive a special discount for as new customers for your welcome. Okay, so open an account with SuperForex for my website, and then please, once you open the account with SuperForex, contact me on my Facebook page and send me a message and ask me to receive one-click FX. So you can try to trade and you can learn how to trade with this information based on a trend. I also provide you with the tool, I also provide you videos with the tutorials and also provide you PDF where I explain how to trade with all the information, all the strategies that are based, that are presented you on my one-click FX tool. So now that's all, that's really all, and I, I can simply say you goodbye and let's see on the next webinar. Have a good vacancy. Bye bye.